Regulation is still firmly on everyone's mind in the financial industry, so John Lothian News got an update on one of the key regulatory initiatives, MIFID II. Here's what Simon Polston-Jones of FIA Europe, Ben Pott of ICAP, and Steve French of Triana had to say about its key provisions at the FIA IDX conference in London.
We're getting there. I think we're further through EMIR, but we have to see what the EMIR review does as to whether that is tinkering around the edges, which seems to be the impression we're picking up, or whether it's more wholesale change. We don't think that. There seems to be some reticence amongst the Commission about using the term EMIR 2, so it suggests the changes are more likely to be tinkering around the edges. Generally more positive and upbeat, I think, this year, acknowledging there are challenges, but we're getting further through that regulatory change agenda. MIFID II and its scale of impact on firms cannot be underestimated, but as we get towards the end of the decade, we're going to get through this wave of regulatory change, and we can really look forward to focusing on innovation towards the end of this cycle.
The wider discussions today were really about what the regulatory rollout means for the market, and especially what we in Europe term MIFID II, which is the next big thing, where it's really about enhancing and increasing transparency on venue trading. And I think there's some concerns that if we push out the requirements for transparency too far, it could have a detrimental impact on liquidity. And again, that was very evident today by the various regulators saying, look, we're conscious of that, and we know we need to calibrate that carefully, and that's currently our biggest piece of work where we really need industry input.
So the biggest challenges with reporting, we had Dodd-Frank and then we had EMIR, but under MIFID II and MIFIR, there's a vast number of fields that have to be collated. So we're going up from something like 20 fields, 25 fields, up to 81 fields. So there might be some pushback on ESMA, but a number of these fields are key indicators, like even the telephone number, whether there's an algo trade, for example, whether you're short selling. And this is just information that the venues and banks have not had to handle up to this point in time. There are other challenges as well, and when we say reporting, there's T+1 reporting, and then there's pre-trade reporting and real-time post-trade reporting as well. And even understanding the acronyms is a big enough challenge. So first thing is get your head around MIFID in the first instance, and then work out exactly what you're going to do going forward.
I think a lot of regulators have acknowledged that we need to look at the impact of the various legislative pieces in a round, look about the cumulative impact, and the FIA obviously put out a paper today looking at that and how that all fits together, and then take the lessons and learn the lessons and move forward and think about where have they gone a little bit too far, where do they need to rein in some of the regulation. And equally, one of the key points from our perspective is recognize innovation in the market. When you see people being able to take risk out of the market, freeing up balance sheet space, making sure those services can exist in the new world.